This is a product that's existed around the world and it's just incredibly successful. It's really exciting to bring that to Victoria and protect Victorian consumers and apartment buyers.
Here with Market Insights Live with Corey Nugent, CEO of Resilience Insurance. How are you, mate?
Yeah, good, mate. Thanks for having me.
Always a pleasure. So a few changes for the off-the-plan market in relation to consumer protection. Do you want to give us a bit of a rundown on what's happened?
Yeah, sure. So Victoria, the government down here is really moving forward really quickly, and they've passed some legislation this year to introduce a strata bond. But at the same time, we're working with government really strongly to introduce and bring in Resilience LDI into the framework, which dramatically changes that consumer protection piece.
And so what does it mean for a consumer? And then we'll go next into what does it mean for developers?
So for a consumer, they have confidence, they have certainty and security that the property they've bought is protected against defects. They're not going to wear those big expenses when something goes wrong.
I mean, for consumers, we know that that's a major focus area is around trust and quality. But now that the government's brought in this new protection, both in terms of the bond as well as the option for the latent defects insurance product, both of those things effectively reduce the risk for consumers by a lot.
Absolutely. So we've got full cover, first resort policy, so there's no waiting around for the full building value. So there's no risk to the consumer. If something goes wrong, we're there to pick up the pieces. This is a product that's existed around the world and it's just incredibly successful. It's really exciting to bring that to Victoria and protect Victorian consumers and apartment buyers.
And so what's the difference between, for a consumer, when there's the government bond piece relative to the latent defects insurance with you guys?
Yeah, well, I mean, a bond is a really good step forward from the government's point of view, but it's limited. It only provides a small amount of protection for a short period of time. So it'll only live for a couple of years. It'll only be for a small amount of the building value, so which is fine if something is quite small and in the early years, but 4, 5, 6 years later, they're not protected and the value of that protection won't be there with a bond. So that's why the Victorian government is really keen to push forward and introduce this latent defects insurance product into Victoria to give real protection to consumers.
And so the difference is that the coverage is much higher. It goes for longer, so for 10 years for the consumer. That's right. And then what's the difference on the first resort? Yeah.
So what that means is in the past in Australia, we've had insurance programs on buildings with defects that require a whole raft of events to occur before someone can make a claim. With latent defects insurance, it doesn't work that way. So first resort means when the event happens, when the defect's identified, that's when you make the claim. There's no need to go and start any expensive and lengthy litigation to work out whose fault it is. You just go to the insurer and we deal with it.
Okay, great. And then for developers, development cost pressures is a major issue. I kind of like it for the consumer, but for the developer, it's another kind of cost that eventually finds its way back to the consumer on the bond side. How does the kind of different price points work from the two different options and how does it play out for developers?
So there's another big advantage into the industry. So there's two really key points. With the bond, whatever that's set at with government, we would expect that it's going to be similar to New South Wales, so 2%. That's going to be a cost, irrespective of this insurance or not, into construction. Yes, it's another cost. The advantage with LDI is we have an inspection program that works throughout the program. That's already showing evidence-based savings for the builder and developer where they're able to address those risk issues before they become a litigation point or a need to go back and fix those items. So builders and developers already around Australia that are taking this up are really seeing that benefit. The insurance costs less than the 2% bond and it's full protection for the full 10 years.
We know for sure that we can see it in our data when consumers are interacting with our platform. When the LDI product is there, that leads visitors to inquiry increases, whether that's in an article or whether it's on a listing. Obviously, when everybody has the insurance bond that's issued by the government, that will be the same. So there's kind of not only a cost benefit of doing the Resilience like latent defects insurance product, there's also a marketing and conversion benefit. I mean, that kind of is the headline, right?
Absolutely, it is. We've got a lot of evidence, and working with you guys here, Mark, it's something where we can see the upsell benefit to developers. So this turns from a cost centre into a profit centre really quickly if you have developers that are keen to engage and get in early and leverage the benefit of that security and confidence.
Yeah, we've seen it in our data with the surveys, and hopefully we can get it up on the screen next to us, just about kind of the uptick in terms of what people are prepared to pay from having that kind of assurance, which makes sense from a consumer point of view.
So it's the better builders that are going to get this sort of product. So those in the market, one of the cost pressures, and we know what they all are, but one of the elements that exist is how do people afford this, how do people afford that, and how can I sell it for a rate that's there? This product will be available to the better builders. So those that are driving price down for poor quality won't get latent defects insurance. They will have to go down a bond route because we're not interested in supporting those negative actors, which is a small number of people in the market. We want to ensure confidence and good build quality, and we put capital on the line to support that.
Well, it's a good thing for consumers, and I think some developers may not love the bond stuff, but as a relative option with the insurance, as a cheaper, better product as far as that goes. The private sector, always prefer to see the private sector coming up with their own solutions as opposed to the government kind of telling everyone what to do.
That's right.
So I think it's a good thing that you guys are having that as an option alongside the bond that's being mandated by the government.
Absolutely, Mike. I couldn't agree more. So one of those elements that we have in that space is we know the bond is coming, we know it's a cost, and builders and developers will hate that in Victoria straight out. We've seen this in New South Wales, and the uptick and the take-up for LDI as a selection against the bond that exists in New South Wales is now huge. So it is an education piece. The industry will get on board and they will see value like their counterparts in New South Wales have seen.
Good on you, mate. Appreciate the time.
Good on you. Thank you.